Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news a big drop in the oil price is being matched elsewhere. But first, the US has been in holiday shopping mode, it being their Thanksgiving holiday weekend. Some traditional stores are doing okay, but the fear is that top-line sales gains may be at the expense of margins. Certainly Wall Street is worried about that, plus the oil price plunge. The S&P 500 ended last week down 0.7%. Not helping US equity prices is the latest US PMI data, with both factory and services expansions slowing and at 3-month lows. EU PMIs are sinking faster, down especially in Germany. In Canada, consumer price inflation jumped unexpectedly in October, up 2.4% and above the expected 2.2% rise. The Italian central bank is warning of risks that are rising for financial stability in the country in its latest financial stability report. Meanwhile, the EU ministers have backed up Brussels' tough position on Italy's debt responsibilities. And Chinese investors are not happy. The Shanghai Stock Exchange fell 2.5% on Friday in yet another sharp fall. Since the start of 2018, this market is down 23%. It'll be a nervous opening later today. Final October car sales data in China shows they were down substantially, down 13% year on year. In Australia, there was a strong Labor Party re-election win in Victoria. The opposition Liberal Party ran hard on an anti-migrant crime fear platform promoted by a party leadership that had veered to the hard right. It didn't get cut through, even with strong support from the federal Liberal government leaders. The incumbent state Labor government ran on public infrastructure, renewable energy platform that did seem to resonate. The result was a landslide for the governing state Labor Party. It seems a change in Canberra is more likely now in their May 2019 federal election. And the Australian Small Business Ombudsman is saying that the Hayne Commission-induced credit crunch now means that the Bank of Mum and Dad is supplying up to 25% of SME finance. SME borrowers are facing unprecedented scrutiny of their domestic and business income and spending and much tougher property valuations. US Treasury 10-year yield ended last week under 3.05%, and that's a net dip of 2 basis points for the week. Their 2-10 curve has also slipped 3 basis points to be at 23 basis points, which is a 2-month low. Gold is still at $1,220 an ounce. US oil prices are very weak again and out a new low of just on $50 a barrel. That is a $6.50 weekly change downwards. The Brent benchmark is now just under $59 a barrel, a $7 plunge. And the Kiwi dollar is starting the week lower at 67.8 US cents, which is a whole 1 cent down from this time last week. We have now settled back to where we were at the beginning of the previous week. On the cross rates, are unchanged at 93.7 Aussie cents and marginally soft at 59.8 euro cents. That moves the TWI back to 72.3 and off its recent highs. But the bottom is falling out of Bitcoin support. It is down more than $600 over the weekend at now just $3,668, which is compounding a massive loss exceeding $1,900 for the week. It's down more than 40% since the start of November. All the risks are now to the downside. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.